What's everybody saying back at Rabobank in terms of the Chinese market? I mean, you can't trade 50% of it. PBOC is actually supporting it. How big a situation is this?
Big. I mean, quite clearly, this is not a proper market. As we look at it today, the Shanghai Composite, yes, it bounced, but we're not looking at the proper index. A lot of it's not being traded. A lot of people who own, I think, 5% of holdings are not allowed to sell it. So this is not a real market. Now, not only that, but there's a lot of analysts looking at the stock market, correlating it against various commodities, for instance. And it shows that still we are in bubble territory, despite the fact that we've come down hugely since the peak on July the 12th, that we may still have further to fall. And as you just said, the moment of truth, of course, will come when those shares that have been suspended come back into the market and we begin to see whether or not there is still pressure. So we have concerns that the Chinese authorities need to do more, but perhaps also they need to do more to try and shore up growth potential totally. And that is perhaps where the problem is. It's very, very difficult to try and convince us that Chinese growth can really achieve its targets for this year.
Are they one and the same policies? I had Mark Farber on earlier, who we always know is good for a line or two about how bad things are in the world. He says the real growth rate in China is around 4%. We've had 4 interest rate cuts. We've had reserve requirements dropped, and we've had artificial liquidity for the stock market. Growth is the #1 priority rather than saving the stock market.
Well, indeed it is, and actually we have similar suspicions that the official rate that we'll get for this year, last year, etc., is actually extending growth more than it really is. So I don't know whether we'd say 4%, but we do have suspicions that perhaps it's closer to 6 or maybe a little bit less than that. And individually, yes, this is the same sort of issue. It's about growth. But another issue that we haven't mentioned this morning is, of course, the debt issue. And a lot of people were saying that we know that there's been a huge growth of debt in China. We know that that's a problem. But when the stock markets were going up, if you like, it was glossing over some of the debt, because for individual companies, if the stock market was looking good, perhaps it didn't matter so much if they were holding debt. So there is that issue too, perhaps debt, and also consumer confidence and producer confidence. We saw the CPI index this morning coming better than expected, 1.4%. But actually, if we look ahead, this rout in the stock market is going to affect consumer confidence, it is going to affect producer confidence, and that probably means that inflation data is going to drop further down the line.
The one word which people are sort of posturing out there, and we'll tie this back to currencies in just a moment, because it obviously has got an impact on Aussie, it's got an impact on all of the commodities as well. But systemically, you talk about debt. I mean, this is where people are not allowed to take their money out of certain major brokerage houses, funds, etc. The first thing that came into my mind this morning was, is this Bear Stearns? Are we looking at an Asian credit, a Chinese credit crunch, the start of a Chinese credit crunch?
It's very difficult to know where this will lead, but I think the Chinese authorities, by looking at their actions, are very well aware that this could be the start of something very, very unwelcome. And you layer this on top of what's going on in the Eurozone with Greece, then certainly there are threats here. And again, you know, you look at the Fed's minutes. Now, the Fed's minutes last night, they were from the middle of June. They were concerned about China, they were concerned about Greece, but those minutes are 3 weeks old, or they refer to a meeting that's 3 weeks old. Certainly those risks in the world have increased since then.
Jane, the Aussies under pressure, they're probably quite happy with that. Does that continue? And if what you've just said, do I continue to buy yen?
Well, you know, for now, I think we've seen the yen sell off a little bit overnight because, you know, the Chinese stock market has lessened, because we had decent data from Japan overnight. But actually, I think the market will remain very, very nervous, and that means safe haven demand will be there in the yen, in the Swiss franc too. Australia, yes, we've seen that currency fall a lot. Again, that got some benefit today because of good Australian labour data, but that is a currency under pressure. We've talked a lot in the last year about oil market coming down. Look at iron ore, 10-year lows in iron ore.
Bear market.
Bear market. Coal prices, really, that's bad for Australia. They're their 2 biggest exports. We think that the Reserve Bank are going to have to cut interest rates again, perhaps twice. Again, look at New Zealand. China is their biggest market too. Dairy producers in America digging holes and wasting milk because there's no buyers for this oversupply, this glut.
Serious situation.
Very serious.